For more on the Fed's big cut, Ben Emons joins us here on set. He's a founder and CIO of FedWatch Advisors. It's literally a full house tonight. There's not an extra seat.
You can't jam
it. I mean, maybe in the middle because it's a donut, but
so all the players are on the field,
exactly.
so to speak. Okay.
We're all in play.
Matt, since we're going with the gymnast.
We're trying.
Ben, what was your take on the message today? Did you also think it was muddled, as Michael had said?
I don't think it was that muddled, but what immediately caught my attention was that forecast for the unemployment rate for this year, right, jumping to 4.4, and that's why I think they lower rates by 50 basis points, because they see that weakening in the labor market somewhat coming through, and they just don't want to fall behind the unemployment rate, so to speak. Because as I said before, like once it goes up, it keeps rising. You know, you would have to slash rates really aggressively to get ahead of that. On the other hand, there was also a message about, hey, yeah, the economy's in good shape. It's not really an issue. But we want to keep it that way. And so that whole forecast was the soft landing. And by getting this unemployment rate down over the course of next year, which goes from 4.4 back towards 4, yeah, you need to front-load rate hikes. So I think, rate cuts. So I think the other interesting change was the median for 2025 going down 100 basis points, basically saying like we're going to front-load this easing cycle if we have an issue with the labor market. I think that was part of the push in the market, the risk-on sentiment of like, yeah, Fed, you're drawing a line in the sand on unemployment.
I mean, that was the one change in the statement from the previous meeting to this meeting, and that is in the jobs statement. This time they said job gains have slowed versus moderated. So they are paying attention to that. But do you have confidence that you can go to 4.4% and that's the line in the sand? I mean, that seems like, I don't know, arbitrary, or like you said, once it starts ticking higher, it's hard to wrest control of that.
Yeah, that's what I read from it. That they put that forecast out there. Obviously, they did modeling and all that, but they put that out there to sort of give a gauge on like, here's really a pain point. Like if we get to that level or higher, then they have to change their rate forecast even more, right? And so I think this is the message for the bond market too. Like to your point, like you get this curve steepening. I guess in partly because this 50 basis points cut may give the economy a little push here, because GDP now is back to 3%, retail sales were stronger, empire manufacturing was better, so there's a little activity already happening on just signaling rate cuts. So you're going to add the rate cut, get a little push here so the curve gets steeper, but you do draw that line in the center, that 4.4% to actually keep that activity going. If not, you got to cut more. So.
Karen thought 50 for a while. She's right. Let me ask you this. Is a 50 basis point cut them basically saying, we think we've beaten inflation and it better not come back. Otherwise, we're going to sort of look pretty foolish 3 to 6 months from now. Thoughts on that?
Yeah, and that was interesting, Guy. They asked him this in the press conference, right? So taking the victory on inflation. He kind of stayed away from that. Probably acknowledging
smart.
Smart enough, yeah. Probably acknowledging that, you do push the economy a little bit, right? So there is a possibility that in a year from now, which is in a stronger economy that nobody actually expects, like a stronger economy and inflation does get further above target. Again, it's all about employment currently, and I think that's why they want to take their chances on the inflation picture, feeling confident it's at a level where it doesn't go higher.
Do you think it's maybe not consistent that Powell is saying that they're data dependent, yet also indicated virtually in the same sentence that the cut cycle has begun? So if the cut cycle has begun, he's saying that, then you're not really data dependent, right?
Yeah, because you basically, but he also said like in the S&P there are multiple cuts, even though you have one descent. So he's basically implying like we're all consensus here that we're going to keep lowering rates from here, right? So it's not a one deal here, one cut, and that's it. Like maybe the 95 cut that we saw at that time, right? It was just that one cut. So it is about a trajectory here. And
do you think that trajectory is now 50?
It could be, because by my own calculation, is that we got the Fed funds rate accounted for inflation going up about 100 basis points this year, right? So Fed funds rate 5.5 and inflation going down, so that's tightening. Plus the balance sheet has shrunk, and you can do a calculation on how the Fed funds rate would do on that balance sheet. That ran up too. So I calculated roughly about 150 basis points of tightening, passive tightening has happened this year. I think that's what they want to take away currently. So you did 50 today. Then you could easily do another 50 the following meeting, even though that sounds large, just on that passive tightening.